as many insights, as many help we can through the social media, through Facebook, Instagram, YouTube, and etc. So today we're gonna have a market update. Could see what happened so far, how we expect the week to close, what is about to be released next week, etc. And hopefully I will manage to help you. So don't know whether okay. So let me just before we go through the charts, let me just be able to share with you my screen. Let me double check that this is the case. This is the case. As I said, it's my first time. So I think I managed to share my screen. So it should be vice versa. So just before we go through the markets, I would like first to make a bit of a recap. So we have seen so far a bit of a risk off, risk on switching between each other. So initially, the day started with the risk off theme. So we have seen dollar declining following some positive news from the coronavirus front. So it seems that overnight, at least in the Asia and US session, yesterday's US session and today's Asia session, the market participants, the investors, were actually ignored the data, the disappointing data, the jobless claims in the United States, the big sharp plunk in the Philly Fed, with the Philly Fed hitting 40 years low. And the Empire State as well, it was very disappointing, suggesting that in April, the manufacturing industry will be hit hardly. And also we had earning in the morning the gross domestic product from China for the first quarter. So China actually facing and suffered its worst contraction since 1970. So all these have been really overlooked and ignored by the market participants, which initially they just stick their minds on the positive side of the markets, stick on the positive news that we might have a potential drug treatment. And they have literally ignored all the data. That was initially how the European session, the Asia session this morning, how it reacted. So initially we were in a risk on mode. So dollar was in a decline. So the commodity currencies benefited against dollar, but as soon as European markets open, we have seen literally the things going from up to down to up. I mean, they have like switched. Dollar actually managed to reverse out of intraday declines during the European session. It literally reversed nearly all its intraday declines, with the only exception, if I'm not wrong, on kiwi. So we have seen that. If I could share also the dollar index, let me just quickly see. Here I have the noise of the S&P 500 US dollar index. Sorry for that. Just it's over here. So great. Okay. So as I was telling to you, it seems that we have a US dollar index being actually breaking once again the 100 level after we retested it several times the last 2 to 3 days, broke it yesterday, reversed down, back on beat, and now as we're going towards US session, it's turning back down again. So we are like in a risk-off mode all the time. However, if you excuse me, okay, I would like to see the euro dollar back. So initially we started with a US with a risk on and dollar being in a decline. Then we continue with the European session, the London morning session, with dollar turning into a bit like reversing all the intraday declines and actually taking back and advancing against pound, against all the commodity currencies other than kiwi. And also significantly posting, actually breaking its inverse correlation with global stock markets. So that came after Mr. Trump. After actually we had the global stock markets rally, after Mr. Trump said that the US states can reopen in 3 stages process. So what triggered my attention is the fact that this time it won't be Trump deciding whether when each state will or reopen, or whether it will reopen. It will be the state governor, according to Mr. Trump. So he gave some guidelines. He gave some guidelines about how these 3 stages will be. But it would be upon the discretion of each state's governor, as he mentioned. According to the guidelines, the guidelines actually recommend that states pass checkpoints that look at new cases, testing, and data over the prior 14 days before advancing from one phase to the other. So it will be interesting to see how this will go. So, by the way, I'm here to help. You can stick on the question box on the chat that we have any questions that you have. So yeah, we are here to help, as I mentioned. So okay, so let's move to the markets. As I was telling you, the dollar actually broke the inverse correlation from with the global stock markets. So we can see that dollar, and sorry, the S&P 500 in general, the equities were in a nice rally since yesterday. Spike higher. This is the S&P 500. Retested 28.95 and it remains choppy, trading like choppy in a choppy range since then, but is holding nice support on these highs on the nearly, let me just check, confirm for you, is like 20 days high. So okay, so here we are. Okay, finally people started attending. Hi guys. Sorry, I cannot really. I don't see any comments so far. Hello, please say my comment. I don't get that much. Thanks for this. You're very welcome. We are here to help. So I'm here to cover any asset you want and to reply to your questions, guys. So as I was telling, we had some really disappointing data out there, initially being ignored, completely ignored. Actually, markets were like trying, they are looking hungry for some positive news. This was what at least was how we could explain the Asia session this morning, but everything turned on the other side, on the other direction once European session opened. So on the open of the European session, we could see that it's over here. Dollar started gaining against the major currencies, so it managed to drift back down. The euro over here while the euro was also under pressure because we have seen inflation missing expectation. Actually, the European inflation confirmed at 0.7% year-on-year basis, in line with expectation, but down from 1.2% year-on-year in the previous month. It wasn't really a surprise. We were expecting a decline in inflation, but based on the breakout, we saw that there was a decline in the services, while the food industry, actually, the food price inflation accelerated as demand increased ahead of the lockdowns. Okay, so we are expecting in the next reading to be worse. Okay, to be much worse, and we are as we're looking forward. Okay, as we're looking ahead, once lockdowns are eased, good prices are likely to accelerate. Okay, so because there is likely to be surge in demand, and also large parts of service sectors will continue to struggle. Other than that, something that also found very, very interesting was the drop of the car registration in Europe, which was 51% year on year. So it was hardly a surprise indeed, but the April numbers are expected to be worse as well. So in April, we'll be able to see the real picture of the economy, because the lockdown was mainly on March and in April as well. And we're expecting that the most of the markets will be back in May. So yeah, the April figures will be crucial. Will actually show the real picture. Okay, so in contrast with the inline inflation, the decline in service inflation, the drop in the car registration, etc., we have seen that the euro over here initially declined on the London session, but as we're moving towards the US session, it's turning like to the upside again. So it gains back ground against the US dollar. So literally to the upside, rebounded away from the initial support that it was like 108, the key level, round level. It retested for a second day in a row, so rebounded, is right now above its pivot, and the next real support is at this fractal at 108.850, or even the first resistance of the day. Overall, however, as I mentioned in my post just earlier, I have done a post with the European briefing. I mentioned that overall the euro dollar remains a bit in a choppy trading range. So you can see that after this sharp decline, it hasn't managed to move far away from the 20-day moving average. It's like either moving slightly above it or slightly below it. We don't have in the medium term picture, at least, not a clear direction for euro dollar, but intraday it has just rebounded, and so further advance or even a break of the latest fractal over here could see further gains to the upside. While momentum indicators, meanwhile, remain under pressure. MACD is negative. RSI just crossed 50 levels, so, and this continues looking to the upside. So a mixed momentum indicators after this rebound. Before I start with all the major all the major currency pairs, I would like to just stick a bit on the equities, if you excuse me. So we have seen that the equities the equities are holding through the day. If you check your commodity currencies, if you check your currency, your currencies generally, your major currencies, if you check the commodities, the metals, oil, gold, and etc., you can see that we have some. They are performing, they are moving, there are ups and downs, but the only ones that definitely hold their gains are the equities. So equities and the US futures, European futures, Asian futures, they are all in a rally. So equities are ripping in a strong risk-on rally so far, and since they opened this morning, so you can see this DAX over here. It shoved it open with this huge gap, and it sustained some gains. The same, if I shift back to the US one, the same thing happens with the S&P 500. It is consolidated, but it's holding the gains. The yesterday's gains. And if I shift to FTSE as well, so FTSE, it might be the only, it didn't actually gain a lot, but again, it's sustained a nice rally. It's like close to the peak of the last 2 days of Thursday and Friday today. So we can see clearly that equity market is up, okay, while all the other asset classes like commodities, energy, and currencies aren't feeling a lot the risk on vibe. So there are all ups and downs, especially if we move to the oil market. But I would like to cover oil like in depth, so I will explain the oil behavior later on. So for now, equities are ripping a strong risk on rally. Seeing this is due to the fact that they have seen a light, as we mentioned, at the end of the coronavirus tunnel. So the announcement that we have a potential drug treatment, the so-called Gilead and Temivit. Sorry, I cannot really pronounce it correctly. So this medicine, it was actually used for some severe cases in Chicago. They had some very, very encouraging data out there. It seems that the treatment works quite well. This positive news, along also is not only that medicine. We had also seen another two companies reporting that they are close to find a treatment, and one of them it was Benetton Labil, a company is keen to use around $289 million into artificial intelligence in order to produce the final drug faster, and to have a big supply of it. So all these positive data, as I mentioned, all these positive, at least headlines, are supporting the global stock market, along with Mr. Trump announcement about the reopen of the economy and the plan that he's having, which is split into 3 different stages. So this is what supports, and or at least it put a floor on the equity market. So we have DAX and French 40 index around 4%, having around 4% incline. Nikkei closed with a 3%, being 3% up. Dow Jones is over 3% higher. S&P same, 3% higher. So as I mentioned, Mr. President Trump's yesterday comments put a floor on the whole global stock market, along with the positive news on a potential or possible, at least, drug treatment for the COVID-19. So, as I mentioned, in regards to the data, the markets were really overlooking the data out of US, out of China this morning, and the first contradiction data since 1970. they have actually overlooked also the retail sales and industrial production data, the Japanese industrial data, but also the European inflation. So pretty much what we are seeing right now, okay, let me just flip to, is that was the safe, moving back to the safety on dollar, while this rebound um, is actually is actually again ahead of the US, so the US session. So I'm not sure, I could not really say whether this will last or whether this is just a boost of the dollar, okay, a boost of the market prior to the US Open. So we have a risk on risk off mood all the time. So the risk on mode hasn't really been covering the full spectrum, I could say, of the asset classes and currencies. So that was for euro dollar. Similar situation you could be seeing the pound, up, down, rejected the first resistance of the day, found a bottom close to the first support of the day, and the key support level at around 124 level. So it didn't manage to break it for for the fourth day in a row. It didn't manage to move below 124. It's trying to retest the 125 again. So only a break above this resistance, the 124, 25.20, sorry, 125.20 is my first resistance of the day, which was retested for 2 consecutive days, broke on Monday, didn't manage to move above it and turn back down again. So this is a key level. So we need to, if we see today a close above it, then this could suggest that cable could extend again and could possibly retest this month's high. However, yeah, we need to see close to 9 above it, definitely above it. So, okay, that was for cable. I cannot see a lot of questions. I don't know whether you don't have anything to ask. Pandemic lockdown affected, let me just see your question, sorry, please. If I may ask, if the pandemic lockdown affected the FX market? Definitely does, definitely does. It affects our economic data, it affects, don't forget the market is all about sentiment, it's all about emotions. If the majority of the investors are are worrying, they have a lot of concerns or they feel uncertain, they move into the safety assets. If, however, there is lack of uncertainty, there is a risk off mode, they get back to they are moving their money from the safety so for the safe haven assets and etc. So it's all about the sentiments. That's why today it was a bit of an interesting day, because we have a lack of data. Okay, so you can see that the reaction in the market, it has to do mainly with the headlines, headlines regarding COVID mainly. Okay, so yeah, first of all, you should know that the lockdown has impacted the economic data of each country. US is already in a recession. The European Union already presented some the negative impact, mainly the manufacturing industry, that this lockdown has. Also, China this morning, its first quarter gross domestic product came out at 6.8%. That takes us 50 years back. So they are in contraction, they are in recession. So this data should depreciate the country's currency. Okay, so everything is relevant. Okay, so yeah, of course they affect the FX market. Don't forget that the economic data present how healthy or not each economy is. So that has an immediate impact on its currency. But after all, the market is all about sentiment. So it's also how the people are seeing the whole situation. It's about their emotions, as we are seeing all these ups and downs all the time. So okay, let's move further, and let's continue with oil. It was a significant mover today. So let me just find it. Sorry, here it is. So actually, my focus turned completely on US oil today, because first of all it managed to break the 19 level, the 19 round level, but also the 18 dollars as well level, just in a single day. So if I just zoom out, but I'm hiding it a bit. Let me just, okay, I will put it over here so you can see. Okay, sorry, the 19 level, over here, 19 over here, and 18 over here. Okay, so it didn't manage to break 19 level for the past 20 years. It tested it several times since March. Okay, so it's kept retesting since 17th of March, the 19 level, but it didn't manage to break it until today. So today we have the decline, further decline for US oil, moving below 19 level, and as we move forward to the US session, it also managed to break below 18 level, and right now is traded at 1780. So the bear market for oil remains, despite the joint statement from Saudi and Russia that they will take further measures. So yesterday night, Russia and Saudi Arabia actually had a video conference call. They are trying to find ways to stabilize the oil price market, the oil price. They weren't so happy that the agreement didn't help the price to move higher. So they had a joint statement saying that both of them, they will take further measures in order to help the oil market a bit, but this didn't have any effect in the price. Literally, the US oil continue plugging, continue moving lower. So we have actually plugged to fresh decade lows. So these levels haven't been seen for, this is a monthly chart, so we haven't touched those levels for nearly 20 years. Okay, this is the monthly chart. We never went this low. These are levels that we have seen back in 2001. So we are literally at a multi-years low in a fresh decades, 2 decades lows, more precisely. So actually, oil today suffered more than 80% decline. Okay, so the overall picture for US oil remains on a strongly negative outlook in the long term. You can see that it's keep moving down and down and down since the end of 2019. From the $65 is now just reached the $1780, while intraday again we had a huge candle in the European session, a bit of a recovery because it was oversold, and again is moving further to the downside with moving average aligned lower. It's below all the moving average intraday, and if I put the Fibonacci on, you can see that it broke all the supports of the day, and like it's in a free fall pretty much. So again, outside the Bollinger bar, so we might see a bit of a correction, but this is because it's already oversold. RSI is below 30. MACD keeps extending to the downside. That literally means that the bears are they having the full control of the asset. So yeah, that was in regards to the oil. We have the oil market outlook anyway in our website. You can go. I encourage you to visit it and see the fundamentals behind oil, because they are quite interesting. So you can see that even despite the fact that they have managed to have an agreement, they have already cut protection, and they are saying that they will do more. You can see that the oil market hasn't really affected yet. It's because the fundamentals are still adding a lot of pressure on the oil market. The demand of the oil is low because literally the whole world is under lockdown, so there is a less demand. We don't use our cars, we don't use planes, we're not like a lot of businesses, manufacturing businesses and industrial, the industry in general, the heavy industry has been locked down, so there is not a demand for oil, while there was a lot of supply. So this is putting the overall the outlook of the US oil under pressure. So we might see an impact, a positive impact for the US on oil, possibly in the third quarter, hopefully sooner, but for now, as long as we don't see significant balance in the US oil price, then it's clear that it's still in a strong bearish market. So yeah, we need to see the price being stabilized for for a reasonable time length. Okay, so otherwise there is nothing turning the overall outlook into a positive one. So that was for oil. Guys, I'm here to help. Please ask anything you want. Okay, so let's go to gold. So gold is under a lot of pressure today. As we mentioned, the commodity currencies in general have turned vice versa. So initially they were on beat, but afterwards dollar managed to recover its losses, and they have gave back any gains that they had. So but the gold didn't actually is in a decline since yesterday, same time actually, so around 3 o'clock my time. It topped at 1740 and is moving lower since then. It found a support at the 200 period moving average. This is the hourly chart, and it rebounded just now, but again remains. If I put a regression channel over here, sorry, okay, let me just put the proper channel so you can see that it remains in a downtrend. We need to see a break outside the channel, and more precisely above the 1700s, okay, which is the immediate support level we have, and it provides a nice resistance as well. So that suggests the intraday picture. However, if I just clear a bit this mess and go back to the 1 hour chart, you can see that after it topped at 1749, then we had 2 days of consolidation down, but like holding a nice floor above 1700s, dodgy, indecision, lack of direction, and eventually today a decline. So if that candle moves or close the day below 1680, then This could actually suggest the shift of the positive, overall positive outlook into a negative one. So if the 1680 level breaks, because it's the 38.2 Fibonacci retracement for April's rally, then we could see the asset retesting this top, which is also coincides with the 50 and 61.8 Fibonacci retracement levels. So around 1660 or even 1640. However, is key whether we'll see a decisive closure below 1680 for gold. That's the medium term. So daily, weekly basis, but the intraday is keep moving lower. Despite this bounce, you can see that it's doing lower lower lows. Okay, so any correction, any upside was just a correction, and yeah, that's it pretty much. If you're an intraday trader, and Fibonacci from that top to that floor could help. You can see that it didn't manage to move to hit the 38.2 retracement level. 23.6 is not a strong retracement level. All the rest of them, about them, they are strong, but this one theoretically is not. So so far this bounce seems to be just a correction. Okay, so that was for gold. Let's move to dollar cat, since I just noticed it. Okay, here we are. The daily picture remains in a decline. You can see that after it posts that high, you can see that it's moving down and down, failing to sustain a move or to break the 20-day moving average. So the overall picture for dollar cat remains to the downside, with MACD suggesting that the positive bias has significantly decreased, and that there is a strength of the bearish bias. So RSI has been flattened, neutral. So as long as it remains below 20-period moving average, 20-day moving average, then the overall picture for a dollar cat is negative. Intraday now, it's moving sideways. It doesn't really move alongside with oil price, but you can see that since Wednesday, was it? Yes, since Wednesday is moving in a narrow range between 140 round number, or so the 200 period moving average, and a peak up to 140, 139. It managed to break that barrier once, but it quickly turned back down again. So only a decisive break, either this resistance or either this support, could give us intraday a direction for dollar cat. Okay, so that was for dollar cat. Let me shift to Aussie and Kiwi. So Aussie, I know this is a bit messy, as I mentioned. So let me just start with the daily chart then. We can see that Aussie was on bid and remains on bid in the overall picture. Aussie dollar remains to the upside. It managed to rebound from these lows. It tested the 165 level nearly. 0.65 actually posted the high at 0.6450. It reversed some of its gains on Wednesday. However, it managed to hold a floor at 0.63 on Thursday and so far today. So despite the decline, it managed to be held above 0.63. Right now it's traded at 0.6370. Is above its first resistance of the day. The next resistance is just 7 pips away, and the very top one, the third one, is at 64.20, sorry. So with my little bit Fibonacci over here, wrong Fibonacci, sorry, I shouldn't use my extension Fibonacci, should be the proper one. So this barrel, this 0.6370, is a strong one because it's also the 61.8 Fibonacci retracement. It was retested overnight, didn't manage to sustain and move above it. So right now we are in a 1, 2, 3 consecutive bullish candles, bullish hours. So yeah, a decisive break above it could retest the around 0.64 level, or even this one 0.6420. But we need to see decisive candle closing above this level. Okay, so the intraday picture remains positive. RSI is looking further to the upside, is above, is around 60. MACD has turned positive, and ATR suggests a 23 pips movement intraday in the 1 hour chart. Kiwi, similar situation, declined overnight. Declined the European session, and so far is moving, has rebounded from its pivot and is extending further to the upside up, and is retesting that second resistance. And sorry, that's wrong. Sorry, but as I was saying, it's very similar with Aussie. Decline in the European session after it topped to 0.60 30 level, decline, but it extended above its pivot, above its first resistance, and it's just broke the second resistance of the day. So the next level to be watched for Kiwi is the third resistance, which stands at 0.6070. Intraday indicators right now. So RSI sloping positively, looking further to the upside. That is at 64. MACD just put a bullish cross over here. Stochastic just crossed the overbought territory. And you can see that it managed, that bullish cross of stochastic managed to suggest on time that, you know what, we'll see a rebound. So stochastic is quite good for intraday trading. Okay, it gives fast signals, but you need to adjust the settings of stochastic so it will give you also as much as possible accurate signals. Okay, so over here it worked quite well. You can see that bearish cross, the fast below the slow line, so that suggests near-term upside move, and indeed that happened in the next 3 hours. Right now, a strong candle as we're going we're just a few minutes away from Wall Street open. That was on Kiwi. Overall picture for Kiwi is neutral, so it's bouncing. The daily picture is bouncing between 0.50 and the 0.61 level since the end of March, the last week of March. So yeah, but it sustains a move above the 20-day moving average for 8 consecutive days in a row. So yeah, let's wait and see. Any questions, guys? Something that you want me to cover? I cannot see, unfortunately, any comments. So I don't know whether I have done something wrong with my broadcast. Hopefully not. So yeah, okay. So okay, now last but not least, it would be Swiss and Bitcoin. So Swiss benefits, might be the only ones benefiting against oh no, it's not the only one, but okay, after it topped the 0.9720 level, it declines 3 black crows let's see how that third one, how we will close below its pivot, breaking the 50-period moving average, and while the other side cross the 50 level. Intraday, yeah, it's back down below its 20-period moving average. Ready to retest the 50-day moving average as well. So the next support for Aussie could be found over here, 0.9658, and fractals could also provide immediate supports. I have two consecutive fractals over here, the 0.9645 and another floor over here, consecutive floor at 0.9630. These levels could provide a nice immediate support if this decline continues. Last but not least, I mentioned about Bitcoin. Bitcoin, along with equities, are the only ones holding their gains. So after we see this rebound yesterday, it kept those gains and is keep extending to the upside, a bit sideways, a bit weak candles, small candles, but it managed to held above $7,000. Okay, so that's the 200-day moving average, period moving average, but also a key level, a round key level, 000 level. So also significantly, if I move to my daily chart, you can see that it's back in my upwards regression channel. So it's back in track after it retested the 20-day moving average and the lower line of my regression line. In 4 days in a row, it managed to turn back up again. It's back in my regression channel and it's trying to extend further to the upside. But definitely the 20-period moving average provides a nice support, while the next support is those two lows at 6,400. That was for Bitcoin. The overall outlook, you can see it's a bit neutral for now. We need to see further incline in order to believe in a rally again. Okay, so that was what was our briefing for the day. Hopefully I managed to help you guys. Thank you, Aussie. So I should share that. So Aussie is saying that have a good trade, the trend be with you. Also take care of the technicals and the headlines. Use your technicals. The technicals are like taking an emotion away of the trading. Okay, do your proper risk management, set your stop losses, your targets at a reasonable levels. Don't forget that. Okay. So yeah, that's a phrase that the Stuart is mentioning. Well, it's like trend is our friend. Okay, so firstly, try to identify a trend, and you see that it is your friend as long as you have the appropriate risk management at the back. So just to end the session, I will say that so far, and as we're moving towards the US Open, we can see that the optimism. Here we are. So we can see that there is still an optimistic sentiment over Trump's plan to reopen the economy, while there is also a risk-on sentiment. So we'll wait and see whether the equities will hold their rally or not. So take care of the headlines. Take care of the market, because we're seeing that it fluctuates, it's all ups and downs. Dollar was initially under pressure, then it turned to a safety asset and is back up again. And right now is moving a bit sideways as we are moving forward to the US Open. So yeah, take care. It seems that the COVID once again and its headlines are dominating the market. So as for next week, we have, just let me quickly go through the major events of the day, even though we will release our usual weekly agenda. So on Monday, we have the interest rate decision from Bank of Canada. On Tuesday, there is the governor loan has a speech. So and we have also the RBA meeting minutes. So it will give us an insight or some signs what their next action will be. We have unemployment rate from UK. ZW economic sentiment from Europe and Germany, along with Canadian data. Retail sales out of Canada. On Wednesday, the key event is the inflation data out of Canada and UK. While on Thursday, the key data are the manufacturing PMIs from Europe and UK. Along, of course, with the jobless claims, as every week from US, every Thursday we have the US jobless claim. We're expecting the same numbers pretty much, another 5 million, getting worse and worse as long as the lockdown continues. However, since Mr. Trump will reopen the market, this weekly data will getting lower and lower, hopefully, actually. So, last but not least, on Friday, the only significant data that we have are durable good orders, along with non-defense capital goods orders, excluding aircrafts. So it's a bit of an empty Friday, as it seems. So yeah, the main events are holding on Thursday and Wednesday. Okay, so that was from me. Hopefully you enjoyed. And I'm glad that I gave you a market briefing. Thank you for joining me. Have a great day ahead and take care.